After all the promises and posturing, the United States has, of course, slapped the 19% tariff on Philippine exports, making our goods more expensive in her biggest market. And it couldn't come at a worse time. The government had just cut its 2025 growth target and now expects exports to shrink by 2%. Meanwhile, before the tariff was even on the table, the World Bank said that the Philippines could grow 6.8% a year until 2040 if we fix productivity, connectivity, and competition. So is that vision still in reach, or has the growth story shifted? Joining us now is HSBC's ASEAN economist Aris Dacanay on what's next for the Philippine growth story. Hi, Aris. Good morning, and thank you for being here with us.
Thank you for having me, Ms. Mikey.
Okay, Aris, let's talk about the number that's on the table, 19%. It was a 1% reduction, a modest tariff concession. What are your thoughts on this amount?
I think first we need to put this into context. During the first April 2 announcement, investors, and particularly local investors, were pretty much excited about what the opportunity the Philippines could have had. The Philippines during that time had the lowest reciprocal tariff rate announced across developing ASEAN, and this was going to be an opportunity for the Philippines to be able to attract a lot of investors abroad to relocate to the Philippines and boost the country's exporting capacity. Now, with 19%, which is roughly in line with Indonesia, and with slightly just below Vietnam, which had 20%, that advantage that the Philippines could have had has diminished. And this is, I think, I sympathize with our local exporters, our local businessmen, that it is a lost opportunity for the Philippines.
Yeah, sayang. It could have given us that edge we needed, because our neighbors are not just neighbors, they're our competitors too. Aris, our economic managers had already cut the 2025 growth target from 6 to 8% to 5.5 to 6.5, even before this tariff. With this new stressor in play, do you expect to see more downside?
I think our own forecast here in HSBC is that for 2025, the Philippines will grow at 5.4%, and for 2026 at 5.8%. So roughly in line with the DBCC government forecast. So we do think the Philippines still has some resilience in it. We don't expect a technical recession, mainly because the Philippines does have an advantage when it comes to the size of its domestic economy. So we do think that reduction in growth is accepting that reality, that the export market will struggle a bit in the next 2 years or so. We do have that blanket of resilience in terms of domestic demand. But in terms even at 5.4 and 5.8, I do think it's very important to note that at those rates, we do still expect the Philippines to be the fastest growing ASEAN economy.
Mm-hmm. Yeah, you mentioned our domestic economy, the size. How can we capitalize on the size of our domestic economy and really boost growth internally?
Yeah, for internally, I do think that there are a lot of reforms that the Philippines can get. Without the tariff advantage, it doesn't mean that we're doomed. There are a lot of things that we can do to improve our growth. Continuing the 5 to 6% ambitious infrastructure agenda is key. Being able to open our markets abroad, not just to the US, but to all other countries out there. I just want to point out one fact. Do you know that Vietnam has a free trade agreement with roughly 70 countries? While I think for the Philippines, for the Philippines, apart from just the ASEAN trade agreements, I think we only have between 3 to 5. So we do think this is a wake-up call for the Philippines to find ways, apart from just connecting our trade with the US, but to look for ways to connect, to diversify our trade, to diversify our markets, expand our markets, and shift from just being a domestically oriented economy to something more export-oriented.
Yeah,
Europe,
absolutely.
etc.
We're counting on our economic managers to really expand those FTAs, especially in light of what's going on with the U.S. Aris, you're an ASEAN economist. Where does the Philippines stand versus our peers when it comes to export resilience, FDI appeal, and policy credibility? Very important factors for foreign direct investors, especially.
That's a very good question. And I think we need to step back for around 7 to 8 years or so during Trump 1.0. So during Trump 1.0, the Philippines was not able to garner all that supply chain relocation that occurred during that time. And ever since 2017, inflation in the Philippines was relatively higher in ASEAN, and the currency more or less performed better than their ASEAN peers. It was stronger than what others may have experienced. So with a strong peso and high inflation, the export competitiveness of the Philippines actually did not improve as compared to the other ASEAN peers. So that 19% tariff rate would really put the Philippines to to some degree of disadvantage. So I guess moving forward for Trump 2.0, I guess the business community, at least for the BSP, being able to control inflation, being able to keep food prices low, and at the same time keeping the peso competitive will be key to make sure that the Philippines remains competitive during the tariff uncertainty ahead.
Yeah, absolutely, Aris. Checking on those figures, let's get your forecasts on inflation, interest rates, and of course the peso. Where do you see all of that heading in this environment with that new stressor of the 19% tariff?
So the 19%, I think it's not just the 19% tariff rate of the Philippines, it's the US tariff rates to the rest of the world. With the US tarifying, let's say, Vietnam, Singapore, Thailand, etc., but most especially China, there are less goods that are being exported to the US. That means there are more goods that will actually go to other growing economies, most especially Southeast Asia, which is the second fastest economic bloc in the world. With a lot more goods being shipped or being exported to Southeast Asia, this increases supply in the region, and of course, it's a disinflationary impulse. So we do forecast inflation in 2025 to be at 1.8% and to gradually accelerate to 2.7% in 2026, which is historically is benign.
Okay.
And of course, it gives the BSP room to cut interest rates. Our baseline scenario is for the BSP to cut to as low as 5% by the end of this year. But I do have to say, because of these tariffs, because of more supply in Southeast Asia, with more disinflation with Southeast Asia, there is room for more.
So 1% inflation for 2025. Nothing has changed since the whole tariff thing. Interest rates, one more rate cut by the BSP in Q4 to a neutral 5%. And what about the peso? Has the tariff shock already been priced in?
So if we look at the movement of the peso yesterday, the peso actually strengthened. So I do think there's some notion that these tariff rates are not yet final, because theoretically, if you increase, if the Philippine tariff rate was, or at least the US tariff rate on the Philippines was increased, that would mean a wider trade deficit, less FDI to the Philippines. And of course, these are actually net negative to the peso. But the fact that the peso remains stable, in fact, it actually strengthened by a few centavos against the US dollar. I do think there is some market belief that these tariff negotiations are not yet over.
Okay. Yeah. Philippine ambassador to the United States, Ambassador Babe Romualdez, said that there is hope that this may not be final. So we're hanging on to that. And Aris, you've got a unique bird's eye view as an ASEAN economist of HSBC. If you're an investor scanning the ASEAN, does the Philippines still stand out? Are we starting to fall off the radar? What are your thoughts?
I think we haven't fallen off the radar yet. I think there are still some optimism that our close ties to the US will actually give us an edge in amongst the trade uncertainty, amongst the tariff uncertainty. So I do want to point out a few numbers. So right after Mr. Trump got elected as president of the United States, we were able to sign an FTA with South Korea, where in the fourth quarter of 2024, they promised to invest a total of 1.7 billion US dollars to the Philippine economy to boost our manufacturing sector. So we haven't lost our edge. I do think our attractiveness is still there. The opportunity of being more attractive, I guess, would have been diminished because of the 19% tariff rate. But the Philippines still has its promise, because I do think that across the ASEAN region, it has one of the most robust reform narratives out there.
All right. Thank you for your time, Aris Dacanay, ASEAN economist for HSBC, for sharing your unique insights with us and for helping guide us and help us understand what's going on in a very volatile world.
Thank you very much.